So maybe we'll take a moment to answer a few more questions. And by the way, if we don't cover everything you're curious about, feel free to hop into the discussion section and ask any questions you might have. I'm more than happy to answer them. One thing we often hear from the entrepreneurs and small business owners we see is, how much will I qualify for? People are typically really passionate about their product or their service or their craft, but they're not finance people. And that's okay. You don't have to be a finance person. And at Bond Street, at least, we really try to sort of simplify that process and make it feel a lot more transparent, feel a little bit more human. One sort of simple rule of thumb metric that we use, and certainly other lenders use in evaluating how much to lend, is this concept of debt service coverage. And that sounds like a scary word, but it really just means, what is the minimum profitability your business must have in order to cover the amount of capital that we're lending? If you're applying, for example, for $100,000, most lenders are looking for at least 1.15 from a DSCR perspective, which basically means 15% more than your net income is needed to cover that amount of capital. So in order to qualify for a $100,000 loan, you need to make at least $115,000 in net income per year. And so obviously if it's more, then that'll allow you to sort of borrow more. And if it's less, then you may qualify for less. With Bond Street and typically with other lenders, you should feel more than comfortable for applying, for the amount of capital that you think you need for your project specifically, or that opportunity. And we'll get back to you with an amount that we feel comfortable with. What we don't want to ever have happen, and you shouldn't either, is you don't want to put yourself in a position where you can't comfortably repay the amount of capital that you're borrowing. How long will it take me to repay that amount of capital? And if I wanted to pay it back early, can I do so, and can I do so without penalty? Right? What most lenders make their income from is that interest payment. And so there is a benefit for many lenders to having you hold that capital for the entire duration of the loan, because the interest is accruing for that 1 to 5 year period. But if you find yourself having made that investment and you're generating significantly more capital such that you feel very comfortable paying off the loan early, there are many lenders like Bond Street that don't charge you penalty for doing so. So you can forego that additional cost, that additional interest, by paying off the loan immediately when you're able to. And that's an easy way to sort of take a term loan, which typically has a set duration, and make it a little bit more flexible to your needs. You can almost treat it more like a line of credit, where you're essentially drawing down from it when you need it. You are still borrowing the full amount up front, but if it's a 3-year loan and you find out that in a year and a half you can easily pay it off, then it may be a good idea to do so.